Hey traders, this is Travis from Master the Market. Today I locked in over $1,200 in profits trading the stock VIEW. This was a gap and go setup that I traded within the first 30 minutes of the market open. And that's what I love so much about trading, and that's honestly one of the best things about trading, is the ability to make these kinds of profits or even more in profits in such a short amount of time and then have the entire rest of your day to do whatever you prefer to do. Okay, so I wanted to break down this trade, show you why I took the trade, and give you an idea of how you can find these trades yourself and how you can make these types of profits. So if we go over to the trading chat room here, this is the Market Master group. Down below in the description, you will find a link to this group. We have a free section as well as a premium section. But this stock was actually called out in the free section today, so you would have been able to lock in some money on this trade as well. Just go ahead and join us in the free Discord down below. Now what I posted today at 9:16 a.m. Eastern Standard Time is the gappers for the morning were looking pretty weak. I was looking for the stock EPIX to hold the $4 area for a dip buy and reversal setup. And additionally, I was looking for an opening range breakout in VIEW for a move up towards 150. Ultimately, VIEW ended up going much higher than 150. As we can see right now at the time of this recording, it's actually up near $2 per share. But that was posted in pre-market when this was actually trading below $1.20 per share. Okay, so the setup that I was looking for again was the opening range breakout. This is something that I've talked about several times on my channel already because it is such an effective way to trade stocks that are gapping up in the morning. And the reason for that is really because these stocks gapping up tend to either crash at the market open or they tend to continue running at the market open. And obviously we want to pick the stocks that are going to have the highest likelihood of running, so that way we can ride that momentum. We can see VIEW is actually starting to sell off pretty big right now, but still this would be a profitable trade even if you were still holding into this big sell-off. Now what the opening range breakout trading strategy is if we go ahead and zoom in here, we're looking at the 5-minute chart, and realistically you can use this strategy on any different time frame. The 1-minute chart, even the 15-minute chart. My preference happens to be the 5-minute chart, and what we do is we wait for that first 5-minute candle to form for this strategy. That's another reason why I actually like this strategy so much, because one thing that most new traders tend to do is they get a little bit anxious at the market open because that's when all of the volume starts to flood into these stocks. That's when they start to have a ton of volatility. They start to get FOMO and think that they're going to miss out on a big trade opportunity, and then they kind of just jump into a trade without having a plan or without actually utilizing a strategy. But with this opening range breakout trading strategy, it forces you to let that first 5-minute candle actually form in its entirety before you take a trade. So you let that candle form, and then what you're going to do is you're simply going to draw a line at the high and the low of that first candle. The high for this one is $1.37, and the low is going to be $1.20. Okay, so that is now going to be our opening range. From there, we're either looking for a breakout to the upside in order for us to buy into that momentum, or you can even look to short a breakdown below the low to again ride the momentum, but that time being to the downside. And we can see we get that opening range breakout here in the second candle at 9:35 a.m. It breaks through that 137 high. It immediately pushes up to the 160 area, consolidates a little bit over VWAP, and ends up going kind of parabolic, almost hitting $2 per share. Now obviously I didn't capture the entirety of this move, but I still made a nice profit of a little bit over $1,200 on this very simple trade setup that was called out in real time here in chat. So let's go ahead and take a look at another gap up that happened this morning. This was stock KZIA. You can see if we go ahead and clear out some of these levels here just to make this a little bit cleaner. We can see in this case we have an opening range with a high of $1.32, and then we have the low down here of $1.22. So that's going to be our opening range for this trade. Now again, we're either looking for a breakout to the upside to go long, or we're looking for a breakdown to the downside to go short. This would have been a really great short opportunity because we can see that it cracks down below that 122 low, and then it sells off all the way down to $1 per share. Now I know a lot of people that watch my videos are newer traders, and because of that, most newer traders tend to avoid short selling because it can be considered a little bit riskier than long trading. But that's going to bring us to the topic of risk management. As long as you're managing your risk and you're cutting losses at the right time, no type of trading really is any riskier than the other. Short selling, for example, we would just look to cut losses as the stock is breaking out above resistance, because obviously in a short position, you're going to lose money as the price rises. So you would want to cut losses on a breakout. So for this trade, for example, if you're shorting into this breakdown of the opening range, your risk level is then going to be up here at the high of the opening range in case this happens to be a false breakdown, and in case the stock ends up running to new highs. Okay, so if we apply this same strategy to SPY, for example, the S&P 500 ETF, we can see that this not only applies to small cap trades, but it also works for large cap stocks as well, and even higher priced ETFs. So we have our opening range here. The high up here is going to be 384.33. Go ahead and draw our line, and then we have our low down here of 383.06. That is, again, our opening range. We can see we get our breakdown here. So that's going to trigger us to open a short position on this trade. And you can see we sell off here. It bounces briefly up to the 38.50 level and then sells all the way down to about 380.50. So there was a nice quick $3 per share profit potential on this breakdown trade. From there, we get a bounce back up, and it's currently testing the high of that opening range. But that goes to show that even if you're an options trader, this strategy can be very useful because SPY has the options chain with the most volume and the most traders every single day. So this would have been a good opportunity to lock in a quick profit on some puts here during this breakdown below the opening range. Okay, so that's how I locked in a quick $1,200 profit today while trading, utilizing this very simple strategy. We have winners like this every single day in the Market Master group. So again, make sure to join us, chat with us, and make some money with us by clicking the link down below in the description. And if you enjoyed this video, please make sure to give it a like and subscribe to the channel so you don't miss out on future uploads. But anyway, thank you for watching. I hope you enjoyed, and good luck with your trading.